Well, let's move on then. The oil minister recently said that Hardeep Singh Puri, gas sector reforms have not reached end consumers when the objective is affordable gas prices. Mahanagar Gas recently cut its CNG price by around 2.5 rupees per kg. To discuss this and more, we have Mr. Ashu Shinghal, the MD of the company. Hi, sir. Morning, and thanks so much for joining in. Well, we spoke in the last 1 month or so, but plenty of news flow post that. So let's get a couple of points out of the way. Have you heard anything from the government with regard to possible price cuts? PNGRB as well as the oil minister said that you're making, higher than normal profits. What do you make of the same?
No, there were statements from the government side and also PNGRB, but they were statements which were in industry specific. So we have not done any price cut based on certain discussions with the government or anybody else, because the prices of LNG also has fallen down since last few months, and the cost of procurement has come down. So in last 1 year, if you see the track record, we have reduced prices of 8 rupees per kg of SCM per kg of CNG in last year April, then followed by 3 rupees in October, and now very recently 2.5 rupees. So it's a calculated thing which we take, seeing the prices of alternate fuel, cost of procurement, and the profitability.
So you have not heard anything from the government which pushes you to take any further price cuts? You're saying the price cuts that you have taken is because the input cost has been falling?
That's right. And in fact, the prices of MGL as such is the lowest in the country for CNG as well as PNG.
Mr. Shinghal, hi, good morning. I think the doubt came because the comments from the minister came and the next day prices were reduced, right? So are you saying that was largely a coincidence?
Yes, because the prices are not under control of the government. So you see OMCs also have reduced the prices. So, yes. You can't add 2 plus 2. You can't comment on that. But procurement cost has come down. So therefore, we have reduced the prices.
Just to take that point forward, we spoke with the member PNGRB, right, a few days back around the time that this entire thing, of course, was brewing. And he told us that, I asked him specifically, will the prices continue to be determined by market forces? He said, yes, absolutely. But he also said that, maybe CGD margins should be between 12-15% and not the around 20%. Not committing whether they will act to bring it lower in any which way. And that comment about market forces, of course, gave comfort. But what do you make of it? As a company, as an operator, how do you look at it?
Again, those remarks were industry specific, not related to any one entity. And our margins, if we talk about Mahanagar Gas, were 12.5 PAT margins last year. And yes, the EBITDA per SCM has increased since last few quarters, but that is primarily because we have been serving a market which, we have depreciated assets. The procurement cost is low, and we have an eye on our volume growth also. So that is the way we determine our pricing strategy, seeing how the alternate fuel is there. And if you see the petrol and diesel also, we are maintaining a very healthy margin related to petrol and diesel. The CNG is cheaper by 22% and around 50% as compared to petrol. So those are the things which we take into account while determining our pricing methodology. And the margins anyway is individual companies' determination about how the capital assets are depreciated, what are the profit margins and things like that. So I don't think the regulator has any intention, or even they have mentioned that they are going to control the margins as such.
So what is the outlook on margins, Mr. Shinghal, from here? I think you enjoy the highest EBITDA per unit at 13.3 SCM in the industry. Does that level sustain even in Q4, even after the price cut?
See, Q4, the price cut has been done very recently. So it is 2-3 weeks impact will be there, but that's not going to impact the whole quarter in a substantial manner. Again, next year, we will see what is how the market behaves and the LNG prices are. Then we will take a call on that.
So Q4 margins similar to Q3?
Q4 margins will be slightly lower because one, that we have reduced the prices, although the impact is only for 2-3 weeks. But we expect that they will go slightly down as such.
Okay. And just to revise for FY25, volume growth, I think you were looking at was mid-single digits, right? 6 to around 7%, I think so?
That's right, because the prices of CNG are lower, so we expect 6
Yeah.
to 7% growth. And more so because we have launched certain schemes also to promote CNG vehicles, adoption of more CNG vehicles. So we expect that the growth comes primarily from CNG segment. So that will be
Okay.
the target.
And EBITDA per SCM will be in 10 to 12 rupees for the coming year.
Could be in 11, 12 rupees. That will be the new numbers.
Got it. The other problem was, the exclusivity notice that was put out by PNGRB, where exclusivity for one of your geographical areas in 2021, it ended in 2021. Have you reapplied for the same? And also, if you could tell us, how big is it in terms of volumes for you?
See, there are 3 geographical areas, and with the acquisition of Unison, we have got 3 more. So total 6 geographical areas are there. Out of that, GA1, that is geographical area 1, which is Greater Mumbai, which is the oldest one, which was pre-PNGRB era. So it's a legacy thing. So there 25 years have lapsed, and thereafter a notice has been put up by the regulator. But there is a provision in the Act as well as the regulation to seek an extension. And there are precedences related to the same, like Gujarat Gas has sought an extension of 10 years, and 10 years block extension can be sought. So we are in discussion with PNGRB, and we are very hopeful that the extension will be given for our GA as well. Related to the volumes, the volume comes mainly from GA1 and 2. GA3 is very new. So around 45% volumes is from GA1 side. So anyway, the land is very scarce in GA1. It is already developed. The costs are very high. To develop infrastructure in GA1 is almost next to impossible because the concrete roads have been laid. So infrastructure exclusivity is a matter which is again sub judice. So we are waiting for the court to take a final call on market exclusivity and infra exclusivity, as well as we are in discussion with the regulator to seek the extension, which we are very hopeful that it will be granted in line with the Act and the provisions in the regulations.
Mr. Shinghal, you said that you were in discussions, but after after PNGRB's recent notification, sort of notifying the end of exclusivity, have you challenged this in court? The recent notification.
Yes, the old court case is going on since 2015. In the recent regulation, we have gone to the court, but after that, we have again discussed with regulator, and we have said that it can be amicably settled as well outside.
So you're saying you went to the court in the last couple of weeks,
yes,
but then after that, you're again in discussion
yes,
with the regulator.
In the last filing with the court, we have said the order is on the court site also.
Isn't there an automatic 1-year extension?
No,
after the end, there is.
It's a block of 10 years, number one, as per the regulation. And since we have not applied, we thought this is a matter under sub judice, so there is no need to apply it. But now, since the notice have come, we have applied for it, and we expect that the regulator will take a note of it, and we will amicably settle it outside the court.
Briefly, since this is pending since 2021, briefly, if you can just tell us what is the basic legal issue here, on the basis of which this is in the court.
See, the matter is sub judice. The point is the Act has certain provisions regarding the contract carrier. After that, regulations can be made related to the contract carrier provisions. However, there are two things. One is the market exclusivity, and other is infrastructure exclusivity. Now, that is a part of interpretation of the Act and the ability to form regulations as per the Act. So that is being discussed in the court. Since the matter is sub judice, I don't want to comment on what is the right and what is wrong. Let the person who is responsible for that, let them come to a conclusion on it. But the basic point is that what should be the time of the exclusivity and what should be the method or the guidelines on which the exclusivity will be determined, and what are the principles on which it can be determined about the maturity of the market, and whether the infrastructure exclusivity can be for one specific company and what type of market they are working on, and whether they have met the service regulations, like in terms of creating infrastructure, having capex, serving the market, creating PNG.
Got it.
The government wants that APM gas to be served to PNG, which MGL has been doing since last many years, and we are the highest amongst the CGD companies.
So you're saying you could, hopefully this will be amicably settled, but since this is pending since 2021, and now we have these comments from the minister, etc., saying that, well, market access is still, penetration is still, it still needs to happen, etc. So you read this read this pending litigation along with the minister's comments, does it make it a little more tricky from here? Because if the regulator had to yield, it would have done in the last 3 years, right? Why do you believe that it will be settled amicably? And right now you have both infrastructure and market exclusivity. What is the probability of losing both or one, in your opinion?
So there, I think we are mixing up 3-4 things. One, that market exclusivity stay has been granted by the court in 2015 itself.
Okay.
Infrastructure exclusivity, the precedence is there for giving 10-year block extension to Gujarat Gas. And the similar lines and as per the provisions of the regulation, we have applied for the extension, and we are again in discussion with the regulator. And we are very hopeful that it can be settled as per the provisions in the Act. The other part is about exclusivity, whether can be more clear once the court order comes. So we don't want to comment on that respect. Regarding the comments from Minister, that was primarily about the industry, that whatever APM gas is getting allocated to the CGD be, supplementing the PNG creation. See, the point is that whatever CGD companies are investing, they get most of the returns in CNG, and the PNG segment is mostly cross-subsidized. So some of the companies, we have noticed that they are not doing as much of PNG infrastructure. So that is not the case with MGL. Like, we have completed our minimum work program. We are the highest in the country about creating the infrastructure, as well as we are lowest in the pricing segment related to PNG and CNG. So I think we are in the better footing to maintain our EBITDA margins, healthy EBITDA margins, which are not abnormal by any sense. They are reasonable, and as well as we are passing on the benefit to the customer.
Is there any timeline by which we will know? Is it possible to tell us? Like 1 month, 2 months? The negotiation and some resolution?
There are no negotiation. It is just a matter of, the PNGRB board to take a call on that. Maybe within a month, we expect that it will be settled.
All right, in the next 1 month or so. Mr. Shinghal, thank you very much, sir, for patiently answering all those questions and explaining the matter. It's a complicated issue, and thank you for being generous with your time and explaining all of that to us and our viewers. Appreciate it. So in the next 1 month or so, we will have clarity, and we should be able to move forward from this particular point.